Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, July 27th, 2010. Well, folks, the markets are trading just off the flat line today after a big gap up this morning. Now, we saw some consumer confidence numbers that were mixed. It was a little better than Wall Street expected, but the real key to today was the gap up. We saw a solid gap up early in the day all the way to the 112.30 level. And again, if you go to your 60-minute chart, you can see why that key level was hit and why you fell back. Now, again, we'll flip to that 60-minute. Here's the high pivot of the day at that 112.30 level. Now, what we're going to do is we're going to scroll back, and I'm going to show you. If you go all the way back here, and this is key, guys, all the way back to the 16th and 17th of June, you can see the pivot tops from that period before you pulled back, consolidated, and then gapped above that level. That was at the 112.30 level. So again, that gives us a reason why the market stalled at that point. And again, something to look for a possible breakout maybe later this week or next week on the upside. Now, having said that, what analysis is key and what is important in today's video? First off, you have to go to your daily chart and take a look at the 200 moving average. Yesterday, we closed at the 200. I talked to my premium members. I said that is going to be resistance. Today, you gapped above it, but notice how you fell all the way back into this 200 today, and that's where you're currently hovering. Now, again, if we want to do a quick check on the markets, let's do that quickly. And Dow is currently up about 28 points, but the NASDAQ is down 5.5, and the S&P 500 is down about a half a point. So you have a mixed market right now with the Dow positive, but the S&P 500 and the NASDAQ both on the negative side. Volume is very, very light here today. Markets are getting a nice little bid. If we flip back to the intraday, you can see we're coming up into this micro pivot top. There's a small amount of resistance. If you get through this little pivot high right here at the 111.75 level, you may see a move up to the highs of the day. But notice how you're starting to pull back a little bit off of that key resistance area, and all you're doing there is analyzing the chart and finding that key level. All right, so again, if you're looking at just the intraday analysis portion, you want to see that this level right here, 111.75, is resistance. If you get through that, you could go back to 112.30, which would be the highs of the day and the gap up this morning. If you fall down, you have to first come through this little area. This is two moving averages. You have the 50 and the 20. The white trend line also, that's at 111.50. If you can get through that, then you start coming into the lows of the day right here at the 111.15 level, and ultimately below that down to the 111, 110.95 area. All right, so again, there's a relatively tight range of trading going on today after you gapped up. Notice the gap up again. You fall right back off of it down to the daily 200 moving average, which I just showed you before, right here, and that's currently where we're sitting. We've been down a little bit, we've been up a little bit, but the market continues to trade in a sideways manner. All right, if we go back to the 10-minute, a couple other things I want to show you. Again, take a look at yesterday. Ever since you got above this key level at 111 yesterday, you could say that essentially you have traded in a sideways range. Here you got above 111, you went up here to 111.50, then pulled back to 111 again, then closed at 111.50. Today you gapped up, but you pulled right back in that same range, came back down, and you're chopping in that same sideways pattern. So again, take away the little gap up today and the little move up yesterday morning, and the markets are again just chopping sideways. And we can talk about this as being what you would call consolidation at this stage of the game. A little bit of consolidation, right, with the 200 moving average on the daily being the key point of interest. Again, volume, please note the lower portion of the chart here on the intraday. Volume is very, very light. It's a little heavier than yesterday. Mondays are always the lightest trading day. I said that yesterday. But after that, again, notice today volume is considered to be very light as well, but a little heavier than yesterday. Now, again, going back to the 60-minute chart, notice this pattern right now. You could construe this pattern to be slightly bearish. Now, you might say, well, why is that? Well, because you have the gap up and then a quick drop. That gap up, quick drop creates a little bit of a downward move, which we are consolidating on the 60-minute off of in a sideways motion. So again, down move and then 1, 2, 3 hours consolidation sideways here. And we're currently in that third hour of consolidation, upticking right now up about 15 cents on the spiders, but moving up into this line. Assuming you don't break above this line here at the 111.75 level, you could continue to look at this in a bearish manner and say you could break down either later today or you could fall tomorrow. So watch tomorrow. I think tomorrow is going to be a very interesting day in this market. Again, Wednesday you have some earnings announcements, you have some economic data coming out. Also Thursday will be very interesting with jobless claims. And then next Friday, remember, the unemployment number and the non-farm payrolls will be a huge number for this market. All right. Having said that, just a little summary of what we're seeing in the markets and based on what trades that I'm currently holding. Again, I have basically one half position short in this market, currently off of that 200 moving average. And other than that, I'm holding some long positions on some Chinese stocks. All of them are in the money. We're continuing to make good money on those, and I continue to think that there will be some more upside on the small cap Chinese market. Spec money is back in play, folks. There's no doubt about it. The speculative small caps died out big time, but they have come back with a vengeance at this point, and you're seeing a lot of these small caps that are trading at the lows down 75% or 50% off their highs of just a few months ago. They are now seeing these plays start to wake up and speculative money flowing back in them. These plays are the ones that you can make literally 25% in one day very, very easily on. So watch those very carefully. You want to be aware of them and continue to analyze them, because those will be the next big money makers. I will be possibly picking up one by the end of the day of these spec plays. And again, I'll let you guys all know, for those of you that are in the research center or are participants of the research center, on the hot charts and alerts should I do so. All right, what else do we have here, folks? Let's analyze the charts on a couple other side time frames here in different stocks. Chevron is having a mediocre day right now. If we flip to the daily chart of Chevron, you have to figure that this is where you're going. You're going to go right up to this $75.75 level, $75.75. At that level, I do think this is a short. But again, it has a good chance of getting there before it becomes that good shorting opportunity. All right, if you take a look at Exxon, Exxon's an interesting chart as well, because if you type in the XOM and look at the daily, it's gotten above the 50 moving average here, but it looks like you're heading right here. See how you have this little bit of a gap? And then a pivot top and pivot top, pivot top, and then you broke out and then fell back down. It looks like this is where you're going on Exxon. And again, we could hit that in the next couple days, or we could consolidate and then hit it later this week or early next week. But ultimately, I do think it gets hit in the not-too-distant future. Probably within a week, that level gets hit. Now, it's not that much upside, and ultimately, I'll probably be looking for a short on that at that point in time. And I'll keep, again, the Research Center members and the Intraday Stock Chat members fully appraised. At any time that I enter a position, long or short, I give the alert out not only to the Research Center subscribers, but also in the chat room, whether it's a swing trade or a day trade. The chat room members get. Swing trades just go out to the Research Center members. All right. So that's Exxon right there. Apple Computer is having a solid day, up about $5. The Apple chart, again, had those earnings that gapped it right here. It fell down on those earnings, still closing positive. Since then, you've kind of been trading up. I do think this level right here will be a good little resistance level. This is the gap up from earnings at 265. If you get through 265, if you just go up a little bit higher to about 268, you have a gap fill going back to this day right here. If you take out 268, ultimately you could easily go back to about 277, 278, and that would be the 52-week all-time highs on Apple, which again would be major double top resistance. All right, so keep an eye on that. We'll watch and continue to follow it and see how it progresses. Let me take a look at a couple other plays here that are of interest to me. Google is having a good day as well. Google has come off nicely. Remember, the key about Google was it had earnings and gapped down on earnings. Ultimately, it's filled that gap. Take a look at that. That is resistance right there. This is where it closed prior to earnings, and after hours, it gapped lower or moved lower, capping down the next day. And since then, it's come back all the way to fill that gap. If you take out this gap fill to the upside, folks, at around 494, you should make a move all the way up right here to about 505 to 507. That'll be your next possible major resistance area. All right, so keep an eye on that. I think that's a very important little chart right there to watch on the Google side. Now, a couple other small caps that I want to point out, folks. Some small caps that I've been eyeing very closely and continuing to possibly think about getting into. CNLG. CNLG, Conalog, very thin play down here. This is one of those small cap spec plays that, again, seems to be very cheap. It was just $2 a few months ago, and if you go back even further, check this out. If we shrink down the chart, it actually was $4.50, close to $5. So you're now seeing this play, literally, if you go back to February, $5, $4.50 on this trade, down to about 85 cents, 83 cents right down here. Looks extremely, extremely cheap to me at these levels. Again, any news, and again, there's been some quiet, hasn't really been any news recently from the company that tells me that you may see some news in the not too distant future. So watch that one closely. I wouldn't be surprised if there's something on the horizon. This company is notorious for releasing news at opportune times, coordinated with market strength, so they know they're going to get the best bounce out of the stock and the best rally out of the stock as possible. Any sort of very, very bullish news, big contract or anything like that, this stock has an upside potential of easily going to $1.50 or so in 1 or 2 days. So keep an eye on it. Again, a fair amount of shorts in that as well could be squeezed. Other stocks that I also like, very, very thin one here, but keep an eye on this one. ENCO and Corium Group. trading up at $6 not long ago. Now it's trading at around $2.30. Nice little bottom formation. It has a little resistance up here. The 20 is not a big deal to me, but right up here you probably would see some resistance around 275. If it could get through that, it could easily bounce back to 350 or more. So keep an eye on that one and the afternoon session and over the next couple days. And I'm just pointing out ideas here on spec trades that could have some possible upside to them. All right, so keep an eye on that. And again, folks, just going back to the SPY, let's go back to the intraday 10-minute chart here. You can see, look at that. We talked about this resistance level right here at the 111.75, and sure enough, the markets are pulling back off of that. So again, light volume in the market. Market seems to be holding. If you go to the daily chart again, note the 200 moving average. We're just on top of that right now and literally touching it as of now based on the gap up and a pullback. You can see the bottom red portion is where we're currently trading, and that's exactly where the 200 moving average is. Take care, folks. Come join the Research Center. Come join the intraday stock chat. Let's make some money. Take care.